I think the units which we had earlier were put up way back in the 50s. So the efficiency of these units were at a much low level. I think the new unit which replaces CDU1 and CDU2 comes with much higher efficiency, and the design has been integrated in a very close fashion. And because the space was a restriction, it has gone vertical. So that's been the innovation as part of the process. But more importantly, I think it reduces the fuel consumption, which leads to a saving of almost a lakh and almost about 125 crores a year. The distillate yield improves by almost around 3%. So that translates to another 200 plus crores of additional value. We have spent around 1,400 crores for this project, and consequent to this, I think the sulfur emission from this refinery, which will be the lowest at 10.5 tons per day, will be the lowest across the country, across all refineries. So from the environmental side, it will be a huge plus.
And so quickly, if I could ask you, one important announcement being made today and the responsibility being given to all three PSU marketing companies of setting up a new refinery in the state of Maharashtra in the coastal belt. How do you see this? What is going to be the roadmap for the same?
I think probably the demand which is growth is which is very positive at this point in time. I think gasoline demand is growing in double digits for quite some time. Diesel, which was flat, has come back to positive territory. I think the country is consuming almost 170, 180 million tons currently, and going forward the projections are even with a 5 to 6% growth over the next 5 to 10 years. I think the demand is going to be much higher by any of these growth parameters. So obviously there will be need for new capacities. I think the Honorable Minister has clearly said that we need to plan a higher capacity refinery, and also to take care of not just Maharashtra but the western region per se. I think the benefits of scale is very much there, and we have seen that as you go up on capacities of commercial value for the investors. So all three of us have good balance sheets at this point in time. All of us are marketing well. All of us need products. So I think obviously there will be an extension of getting into the investments at this point in time.
And quickly, if I could ask you, sir, from BPCL's perspective, for oil PSU, how challenging or easier times it is? On one hand, we have the inventory losses. On the other hand, crude are trading at all-time low. How do you see Q3 panning out, and thereby the FY16 as a whole?
Well, I think there's been enough material floating around about the inventory losses and the kind of numbers, but I think it's a process by which the market realigns itself. It's good for the country because the crude prices are at a much lower level, so obviously the deficit figures are reflecting that kind of numbers. Going forward, I think the prices are likely to remain benign at least till 2016 and 2017. So there's no great impact which is going to happen because of sudden spurts in prices. That's what the prediction is. I think for the refineries, they are all doing well. Yes, there will be an adjustment for the inventory valuation at different points in time. But what goes down may also go up at different points in time, and that should get corrected as part of the process.
And how do you see the margins panning out?
Margins currently are quite good. I think the Singapore cracks have been close to around $7 to $8. So obviously the margins here are reflecting that kind of a trend at this point in time. So it's just that the crude values having gone down during the quarter will have an impact on the valuations. But that's a process which keeps going on. It happened in the first half year, and hopefully it should stabilize and we should see better numbers.
And last question, sir. While all this is panning out, how challenging it's going to be on the capex side? Would the capex side continue as, and also the whole argument or the debate coming around is a good time to go out and buy assets? How do you look at it?
Well, capex, I think we have been spending almost around 10,000 crores a year. Last year and this year also we'll be spending very close to that. Next year the plans are for crossing 10,000 crores. So capex plans are very strong because the bottom lines have been quite good, cash flows have been quite good, and the balance sheet provides for that kind of a capex support at this point in time. As far as international assets are concerned, I think we are looking at assets. There are a few entry points which are available, but obviously people, when they look at the long term for upstream, nobody believes that 30 or 35 or 40 is going to remain for the long term. So obviously the valuations could be very different. We are scouting, and hopefully we will come back with further announcements at different points in time.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.